So hello, welcome back to a new video, and today I want to show you how to analyze price action charts without having any indicators and without having any other tools other than regular momentum analysis. And I'm using the TradingView replay function, which is a great tool for replaying market history and really understanding what is going on in the market and honing your skills. So we are here in on a Forex pair on a 2-hour chart. And we've been in a downtrend, then we had a recent uptrend, and ever since then we more or less moved just sideways. So where is our last previous area of high? Here. Where's the last previous area of low? Here. So as long as we below this area, we are technically in a down or in a range market. There are of course downtrends and uptrends within the range market. They can be traded on the lower time frames, but we are looking for longer term trends and longer term developments with breakout trades. So generally what I would do is wait for a breakout of either direction and then see what is happening. So you can see here we are in this in the range, and technically we are in a short term uptrend in a longer term range. That's how you would define it. So the market is making higher lows here at the bottom. And yeah, we're just trading sideways in the range, a little bit of a consolidation, and now we are just shot up back into the previous areas of highs. Range traders would get ready now to trade a short reversal if there are signs that the market is showing actual signs of bearish momentum, or on the other hand, what I would like to prefer is a breakout trade to the upside. So let's see. We are now, technically, we have broken the previous areas of highs. So if you are a breakout trader, you could initiate a long entry. So long, and the stop loss depends a little bit on your trading style, somewhere below the previous area of lows and resistance. Targets as well, it's very personal. If you are conservative, you would just target the first highs. If you are a little bit more aggressive, you could target the second area's highs, and then maybe the third area of a major. Here's a little bit of a level in between. So let's say we want to go, we are not the most conservative, we are also not the most aggressive traders. We are somewhere here in the middle, and we will target another area of highs. So this would give us a huge 8 to 7 reward to risk ratio. Again, this is all hypothetically, and the goal of this video is really to just show you how to analyze a trending or momentum market and what to pay attention to when you analyze momentum. So let's speed up and see what happens. You can see we are pulling away a little bit, and I really want to get rid of this for now. So let's adjust that. So we are pulling away from the market, from the previous support or resistance, and as long as it holds as support, as long as we don't break below that again, we are still in an uptrend. Can see another favorable candle, another one, and then a huge momentum surge roughly halfway towards the first area of resistance. A small candle, not really threatening, and this should not really scare you out of your position considering where we are in the overall trend structure. Very long trending move, just a small candle. And a continuation to the upside. Let me zoom in and that becomes more clear. Small candle again should not be too scary. Again, a small candle, we are still here in this little consolidation, and as long as the market is not really breaking to the downside here, we are technically still in an uptrend. So as long as the area of previous support holds, we are good to go. And we move higher and we move lower, but still not challenging the previous low area. And now we almost made it at the previous resistance area. You can see it's a very strong resistance where we saw a very strong reaction. Last time you can see we shot up, and then within 2 or 3 candles we immediately turned lower. So there's a good chance that we can see something similar. So you can see one little candle against us, and again, I would not get really scared out of the trade as long as we hold previous support, which is roughly here in this area. See, 2 candles against us is not something to worry too much about. We are moving higher, back into the highs, back into the lows, and this is important to understand. What did the market do here? The market tried to rally at the previous area of support, and during the candle this probably looked quite intimidating when the candle was very weak, But again, you can improve your price action reading abilities if you only make trading decisions on the candle close. And you can see we retraced halfway back up into the candle. So this is actually then not a very weak signal, but actually a sign that there are buyers in the market who are still interested here and they're defending the lows. Consolidation candle and a move lower. So we are now back at the lows, and that's very, very interesting to see what is happening now. If this area is challenged, if we see valid breakout, we need to overthink our long idea. So let's see. Consolidation. Oh, and what was that? There was a gap lower. So this here is then the Friday close, and this is the Friday to Monday gap. So what happened here? The price closed here. We gapped lower on Monday morning, but within the first candle, we immediately closed the gap. And how do we interpret gaps? A gap close is common. It does not always happen, but what can happen now? There are two potential scenarios. After a gap is closed, often the price will reverse into the gap direction. And if the market closes below this gap area, then we will exit our long trade. But if we decide, or if the price decides to move higher, the price is still valid and we will still continue to be in the trade. So we are challenging the lows, but as long as we are not making a lower low, we are good to go. Consolidating, moving higher a little bit, moving higher, moving lower a bit, lower, higher. So we are now in this consolidation where we are early mornings in the trading session or in the weekly session, where we have now, after the gap close, established a morning range, and that is quite common in the Forex market. Monday mornings tend to be a little bit quieter, so we will see what is happening now. A gap to the, or a breakout out of the gap area and of the consolidation. This would then signal us that we should overthink our long trade and probably exit. Or if we close above this, as we are doing now, and pulling away, then our long trade will be revalidated. And we move higher, consolidating a little bit, consolidating, a little bit higher. We are back at the highs. So you can see this indeed was a very, very important area of previous resistance, and there's nothing wrong with targeting a first resistance area, because, well, especially in this case, it was quite strong, and you wouldn't have to sit through all the noise if you just be out of the market at the first target area. Of course, on the other hand, if you target a wider take profit, the upside and the potential benefits is that your winning trades will be higher, but of course the downside is that you have to sit through those drawdown periods more frequently, and yeah, not always will your wide take profit target be reached. So it seems like we are trying to break above this area with a little bit of a struggle, but yeah, you can see we are moving higher. We are never challenging the lows, so now you can see we are back. It looks like in an uptrending mode. A little bit of opposition, which is normal. You will never expect that the market just breaks out and jumps to your target, but as long as the lows hold, we are still good to go. And we are back at highs. Now we are moving into the second area of resistance, where again you could expect a strong reaction, because this was the origin of a strong downtrend. So let's see, do we get another challenge? Do we get another drawdown, or what will happen? Okay, we see a consolidation, was expected. We would not expect a clean break at such an important level. Another consolidating, okay. We move higher, so the market is trying to push higher. The buyers are not yet in full control, but they seem to be interested. Again, almost at the target, but not quite there yet. And now our target would have been hit. You can see we are just below the third area of highs. You can see that the target should generally be set always a little bit below a potential resistance or support area. And yeah, now the price is consolidating again, as expected. You will always, or you will more often than not, you will see a reaction at a previous area of high and low, and that's what we are seeing right now. And that's it. So you can see how you can make sense of price action, of just looking at pure momentum, highs and lows. What is the market doing at a gap? Is the gap closing immediately? And what happens after the gap close? How are lows and highs forming on your charts? And if you want to learn more about this way of trading, really make sure to check out the link in the description below, where you will learn my exact trading strategy step by step. I have around 10 patterns that I trade, different entry criteria, different tools, different ways of analyzing the market. It works on all time frames. And yeah, you will get a step-by-step education where you will learn more of how to read price in a professional way and really looking at the sentiment and understanding who is in control, where are the buyers, where are the sellers, and what is likely to happen next. Thank you for watching and see you in the next video.